How disconnected are we right now from where we need to go?
I think the problem is that the Federal Reserve has not been forceful enough in stating not just what their goal is, 2% inflation, but the means to achieve that goal. Chair Powell in his press conference last week didn't really want to talk about why monetary policy might actually not just have to go to neutral, it might have to go to tight. And I think a tight monetary policy is what's going to be required to get inflation under control.
Why are they timid?
It's not clear to me. They're not timid. Certainly, they're not timid about talking about what the end goal is. But to me, if you're talking about the end goal, 2% inflation, you got to also describe how you're actually going to get there. And if you start to sugarcoat it, then financial conditions don't tighten as much, and you also run the risk that people will lose confidence in the Federal Reserve. One thing that's actually in the Fed's favor up to now is people still are confident the Federal Reserve is going to do its job. But if you keep under promising, what you're going to, what's required, then I think there is a risk to the Fed's credibility down the road.
Bill, do you think that this really is sugarcoating, or do you think that Fed Chair Jay Powell just does not believe that we're going to get a more persistent level of inflation that many people, including yourself, are talking about?
Well, I think you can see it also in the Fed's own economic projections. So, for example, after the March FOMC meeting, they published a summary of economic projections. And what they showed was inflation was just magically melting away, despite a monetary policy that didn't really get to tight, and despite the fact that the unemployment rate did not rise. The unemployment rate was still projected to be around 3.5%. So that's sort of a magical, immaculate disinflation. And I just don't think that's how it works. The Federal Reserve has to tighten monetary policy sufficiently to slow the economy down to push the unemployment rate up. That's what's required. And I think the Federal Reserve should be more forthright about explaining that to the American public.
Do you think that Andrew Bailey over at the Bank of England really basically charted the path for Fed officials, saying, look, we're going to be hiking rates into a slowing economy. We might just exacerbate a recession, but a near-term recession will be what's necessary to bring supply and demand more into balance to actually create more growth later on?
I don't think the Fed necessarily has to say that there's going to be a recession. I mean, the Fed should still shoot for a soft landing. But I think they should explain that a soft landing is very difficult to achieve when you have to push up the unemployment rate to hold down inflation.